Recording in progress. Can you all see my screen? Can you see my screen? Can you see my screen?
Yes, confirm.
Awesome, awesome, awesome. Let's start with dollar index. All right, starting with dollar index. On the monthly time frame, heading over to the monthly time frame on the dollar index. So remember, right from Q4 of 2022, that was during October, I think of October, November, December of 2022. After a massive rally, this was a rally that was happening throughout 2021, even going to 2022, Q3 of 2020. There was a massive rally in the prices of the dollar. But getting into Q4, we started seeing some level of collapse in the prices of dollar. But now we establish the fact that if the market wants to reverse, all right, there are certain patterns the market has to unfold for it to confirm that the market is about to reverse. So these patterns can be in the form of head and shoulders, double top, all of those things, triple tops. But then we never saw any of those things here happening on the dollar index. So with that not happening, we were able to establish the fact that this is just a pullback or what we call retracement. Let's call pullback here. Let's use the word pullback. Now, usually when there is pullback, in this case of an uptrend market, the pullback is usually coming back to an area of demand. Okay, let me delete this. Please, if you're just joining this meeting, mute your mic so you don't disturb us. If you're joining a meeting, kindly mute your mic, especially if your background is very noisy. In fact, even if your background is not noisy, as long as someone is speaking, please mute your mic. So we established the fact that when there is pullbacks like this, the pullbacks usually would come to a significant area of discounts, all right, or demand zone. So this was the demand zone we were able to highlight some months back. I think one of the previous episodes, which you can go back and watch. Now, the market has literally pulled back into this discount. So what we would now observe is to see if the market will now continue on this bullish rally, if the market will likely continue in this bullish rally. Now, this confirmation or what told us that the market was likely going to continue in this bullish rally was the bullish engulfing candlestick that pattern that was formed somewhere around here. All right, this bullish engulfing. That's just the first criteria that tells us that the market is about to, continue the uptrend. But then the market started consolidating. Now this consolidation should be about how many months? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, almost a year. That's throughout 2023, the market has just been in a ranging market on the dollar, hence why we were not really having opportunities on dollar quoted price throughout 2023. Although we had some few positions which some got stopped out, but last year the dollar wasn't really giving great trading opportunities across the board. So we were just having it on the sidelines and all of that stuff. Now that had happened, it has occurred. Now currently what we are still seeing is that the dollar is resting above this demand. It's still trading as long as this dollar doesn't close below this demand zone, there's no bearish trend, there's no reversal whatsoever. As long as dollar doesn't close below this demand zone, there is no reversal whatsoever. So as we can see, the dollar is still trading above this significant area of demand. And for the fact that we had a bullish engulfing candle close January, showed us that dollar is about to rally. Now we all have our entry criteria and all of that stuff. And the second entry criteria we usually would have for setups like this is if there is a break of structure on the weekly time frame. Now we've scaled into the weekly time frame to identify if there is a break of structure. Most times it's difficult for us to use candlesticks charts to identify break of structure. Hence why we usually will change to line charts for us to identify a clear break of structure. Now, this is the line chart that we'll change into. We now use this particular tool to identify where there was a break of structure around this area. And where there was a break of structure, we can see it very visible somewhere around here. There was a break of structure here. Let's now change back to the candlestick. There was a break of structure here. So this break of structure is telling us, or is now telling us that I'm about to rally now. All right. This break of structure is now telling us that I am about to rally. Now, after the break of structure, of course, it will usually go back to a minor discount area or a minor demand area to buy. We can identify that minor demand area somewhere around here, of which price has just dipped into that demand area. Price has just dipped slightly deep into this demand area. So we should be expecting something to happen at this area. We should be expecting something to happen at this area. Probably, the market would usually would open, right? If we go to the daily time frame, we really see another minor break of structure and all of that before the rally up to our targets. So we should be expecting a rally from here on DXY, that's the dollar index. Now that's just the second confirmation. And the third one is that this is a reversal candlestick pattern, guys. Give me a sec. Now, this is a reversal candlestick, but no, not candlestick, a reversal pattern. All right, this is an inverse head and shoulder. We can see, and let's change it to the line chart to see how that inverse head and shoulder is. Give me a sec while I pick this tool. This is the left shoulder. This is the head. And this is the right shoulder. So all of this is telling us that prices of the dollar is is about to go bullish. Of course, we can would usually have some let's go to the daily time frame. We usually have our entries somewhere around here. There may likely be a break of structure pullback before the bullish rally continues, but that's not what I'm going to share with you. What I'm giving you the overall outlook market. So what you now do is for you to use this outlook, go into your daily time frame or your 4 hours time frame or your smaller time frame and try to make sure that your entry is in line with this order flow, which is bullish. So what you now do is use this outlook that I've shared with you right from the monthly time frame, weekly and daily, to now go to the 4 hours time frame, 1 hour time frame to frame your entries, your buy entries. So you would, of course, there may likely be sell entries, but those sells would be telling us that it's just pullbacks and all of that stuff. And there are some people who are that very good in trading pullbacks and stuff like that. I'm not really that, although I trade pullback, but I have a strict rule-based system for trading pullbacks. So if you have it, you can usually scalp through, but I don't usually advise scalping. So as a responsible trader, I will tell you to align your focus on bullish rallies like what we're seeing on dollar prices. All right. So let's check what macroeconomic is telling us. Give me a sec. Let me let me see. Give me a sec. Forex traders. Who is a scalper here? Do we have any scalper here? Do we have any scalper in the house? Scalpers, let's see you. Is there any scalper here?
Yeah.
Who is that?
Yeah. Okay. It's only I'm out now.
Adebes, are you a scalper? This guy is not answering me.
Okay, shall I know for here?
Please mute your mic, bro. What is this guy? All right, so let's check what's. Can you see the side of the screen? Can you see the weekend view? We all seen the weekend view. Forex traders, are we seeing the weekend view? Please speak to me.
Yes, we can see it.
All right, cool. So let's see what the weekend view is telling us for DXY. Okay, for the DXY, the weekend view is telling us sell. It's telling us sell, and this sell is a minor sell though. It was for the week. Today's already Friday. Today's already Friday. It's of March. So this outlook, this data is the potency of this data is ending today. So this sell outlook was what gave us this massive collapse. Are you still see my charts? Or are you see my charts now?
Yes, you can see it.
Charts, bar. All right. So that's weekend view that told us the sell was what gave us all this collapse on on the DXY index. So let's see what the next week data will tell us. But I'm seeing a massive buy on prices of the dollar. So that's it for the dollar. Let's check Euro USD. What is Euro USD telling us? Going to the monthly time frame on Euro USD. We can see that Euro USD dipped into a significant area of supply. Give me a sec. So there was a supply here where Euro USD is dipping into. So as as a law of price action, as long as Euro USD sustains below this supply area, is a sell. All right. As long as Euro USD, give me a sec. Let me zoom it in. So as long as Euro USD sustains below the supply area, or what ICT calls a premium, it's still a sell. All right. Now, in line with that sell, we can see that there was a bearish engulf. Please, if you're just joining us, mute your mic so you don't disturb the section. So there was a bearish engulfing here. This bearish engulfing was now giving us a sign that Euro USD was about to collapse. But then we cannot just start selling Euro USD because there is a bearish engulfing on the monthly time frame. There are other things that need to add up for the potency of this sell to unfold. Hence why we go to the weekly time frame to see if we can identify areas or we could identify break of structure. Jesus Christ. Jesus Christ. People just be entering it and be shouting in the background. Ouch. Experience. So going to the weekly time frame, we will check to see if there is any break of structure. Hence why we change to the line charts. So changing to the line charts, we are not seeing any break of structure on Euro USD. Or can any of you identify any break of structure on Euro USD as we speak? Is there anybody who can identify Euro USD? There's no break of structure. This was the last low before the price rally, and nothing has broken this low. So there's no break of structure on Euro USD. And if there is no break of structure on Euro USD, then we are not interested in these assets. Very simple. Now, what I want to tell Forex traders here is that try to create a rule-based system for your trading. try to create systems, try to create structures, and try. That's what most people call trading plan, but I don't usually call it trading plan. I call it the systems of entries. So it's very much simple. It's like a toolbox. I have a box I tick. All right. If this one has played out, I'll tick. I'll come to the next one. If this next one has played out, I'll tick. So I keep ticking until all the entry criteria are met. If at any point there is no one that has been met, then I'm not interested in that asset. So as we can see, Euro USD has not broken any structure. There's no clear break of structure here, and hence why I am not interested. It has not met my criteria for trading. So I'm not going to waste my time to analyze Euro USD. So until Euro USD breaks below this structure, then I can now be interested in the prices of euro, where I would go to the daily time frame for sell. So until that happens, until then, we will usually analyze euro USD in subsequent Black Wallstreet Call. But as it stands and as we speak, euro USD has not broken structure. It has not closed, anything like that. Nothing. So we are not interested in the prices of euro. Let's go to the next asset. Let's check GBP USD. Still on the monthly time frame, let's go to see what the monthly is telling us. First of all, it's very clear that after the massive collapse that happened throughout 2021 till 2022, Euro USD pulled back. GBP USD, I keep calling Euro USD. GBP USD pulled back into the supply. So after they pulled back into supply, there was a bearish engulfing where we sold GBP USD some parts of, I think, Q4, Q3 of last year. We sold Euro USD, and after it came into this minor discount area or minor demand area, we started rallying, and since then, GBP USD has been in consolidation. So as it stands, GBP USD is not giving a clear price action. Why? Because there is no bearish engulfing, and when there is no bearish engulfing, it's telling me that it's not ready to collapse. So until I begin to see a bearish engulfing like what happened somewhere here, if I see it happening here, then I can now be interested in GBP USD. But as we speak and as it stands, nothing like that. There's no reversal candlestick pattern. There's no bearish engulfing. There's no confirmation if GBP USD is about to collapse or not. So with that being said, we are not interested in the prices of GBP USD. Going to the next asset, but some forex traders, now let me make this clear. I'm not trying to impose my trading strategy on you. All right. What I'm trying to tell you, what I'm trying to share with you is how I trade, and it has been working very well for me. Incorporating it with my risk management strategy, all of these things has been working perfectly for the past how long I can even remember. All right. So for some people, some traders, they may have their trading strategy, and for their trading strategy, they may be seeing some trades on this asset falling. But for me personally, nothing is happening on GBP as far as I'm concerned. So when there is nothing clear on assets, I don't force it. I don't try to force it. So let's go to a more clearer asset class. Let's check gold. This gold is about 1,700 pips, but guys, I did not see my entry point. I won't lie, I didn't see any of my entry on gold. So I don't know. I don't really know why there was a lot of rally and all of these things here, because first of all, okay, I can still remember. This was the last time we had the Black Wallstreet Call during the Hamas and Israel war. During that war, of course, we all know that gold is a safe haven. All right. So as a safe haven asset, when there is crisis, when there's crisis in the economy, in the country, or anything like that, investors tend to pull out their funds from risky assets into safe haven or less risky assets. And a less risky asset or a safe haven is gold. All right. So investors were now pulling out their funds from high risky assets to now a safe haven, which is gold. Hence why during the Hamas and Israel war, gold prices was still buying, and since then gold prices are still buying. So what I'm seeing now, the reason why I couldn't really participate in this gold buy is because in the principles of price action, we can tell ourselves that this was an area of supply. All right, principles of price action 101. This was an area of supply. All right, and in areas of supply and demands like this, it is prone to reversals. Okay, areas of supply, areas of demand are prone to reversal. So when price gets to these areas, what we do as responsible traders is to wait. Why are we waiting? We are waiting to see or to confirm if there would be a reversal or if there will be a break of that supply. So in the case of gold here, gold went into this supply area. So what I was expecting two things to happen on gold, right? The first one was if I could see a bearish engulfing on this area, then it would be telling me that gold is going to collapse. But there was no any bearish engulfing. So what stands now is that gold has eventually broken the supply area and is still going massive. So I'm still not going to trade gold throughout this month. Why? Because I want to confirm if this is an actual break of the supply. So what I mean by an actual break of the supply is if it closes above, like the way it is now, if it closes this way throughout this month of August, in this month of March. So if the month of this March ends and gold is still trading above the supply, that means gold is telling me that it is about to continue this bullish rally. All right, so until then, I will now be looking for pullback to buy, pullback to buy. But as it stands, I'm not interested in the prices of gold. Reason being, I am not sure if this is an actual break of the supply area. Have I cleared myself on the prices of gold? Yeah.
Yes, we did. Can you hear us?
Yeah, I can hear you guys. All right, I was just going through the chat box. All right, so that's it for the prices of gold. Which other side? Let's look into the JPY assets. JPY assets. So first of all, this is the JPY baskets. JPY baskets. Okay. This JPY basket is more like dollar index, right? It controls the overall price movement of all JPY quoted currencies. Just the same way dollar index, is a summary of dollar quoted currencies or dollar quoted assets. So let's see what the JPY basket is telling us here. This is on the monthly time frame. It's very clear. We don't need to analyze anything there. This guy is bearish. All right, the guy is bearish, so we don't just need to analyze it. You can see bearish. It's been selling a series of lower lows and low highs and lower lows. Is what we've been experiencing in the JPY basket. So very much easy. What we just do is to zoom in and see what is happening currently in prices of JPY. So as we zoom in here, see that this guy is still around this area, which is like an order block. So it's still an area for further collapse. Now going back to the weekly time frame, we could see that, let me delete this and analyze it again. So we could see that there was an order block formed somewhere around here, all right? And it has eventually pulled back into this order block. So we should be expecting a collapse in the prices of JPY from this area, all right? So we should be expecting collapse. So that could be we go into the daily time frame to see what the daily time frame does for us. But if this asset eventually closes above the supply, then next one we are looking at is this other one, right? This other one somewhere around here, but I'm not sure. As I see this as a big issue here. So a collapse should be happening from next week around this area. That's it for the JPY basket. Now let's go to USD JPY to see what we can do in alignment with what the JPY basket is telling us. So quick one here on JPY, USD JPY. All right. On the monthly time frame, what we can pretty much see here is the guy has been buying throughout last year. In fact, this was what gave us a lot of money. Q2 of last year, Q1, Q2. Q1, Q2, our asset was GBP JPY, USD JPY, CAD JPY. Those were three assets we traded last year. Why? Because the trend was very clear that it's bullish. And we can see here that it's very bullish right from, if I'm not mistaken, December 2022, 2020. December 2020. USD JPY has been bullish. The economy, the Japanese economy is, Japanese has one of the stable economies that's been bullish. So very much easy. This guy came here, so we're expecting a pullback to area of demand where we highlighted here. So we kept buying USD JPY from this demand. After this pullback to this demand, we kept buying USD JPY, and even up to this moment where we can see after breaking the structure, it pulled back into this demand area and it's still heading higher. So what we can see now is, let's go to the weekly. This is not a case of break of structure or on the weekly time frame because it's a trending market already. All right, it's a trending market. So it's not like a reversal. All those ones were reversal markets, but this is a trending market. The market has been trending since, so this was the first entry we had here. So what I'm seeing here on the prices of USD JPY is that USD JPY should be buying here because this is another block. There's another block somewhere around here. Okay, we should be expecting USD JPY to buy from here. But now two things is about to happen on USD JPY, and also remember the two stocks I mentioned on the dollar and the yen basket. So two things is about to happen on USD JPY. If this guy doesn't buy it, now let's use our flip to identify potential target points. So this is the potential target points. First target should be, we are looking here as the first target. Looking there as the first target, second target here. So since we've identified the target, let's take out the fee. So two things is about to happen here on prices of USD JPY. If USD JPY doesn't buy, give me a sec. If USD JPY doesn't buy here, from where it is now till the first target and the second level target, now it will then pull back to this other demand area. So there are two demands, potential demand areas. So if it doesn't buy from this current demand area, it will have to pull back first of all into the second demand area before the bullish rally. So this is what we are expecting in USD JPY. So what I advise you as responsible traders is that just watch. Don't just take any position. Don't take any position at the moment. Okay. What you have to do is just to wait, watch price movements on what USD JPY is doing. So if it wants to, buy from the current supply area, demand area. If it wants to buy at the current demand area, there will usually be cases of break of structure on the 4 hours time frame or on the daily time frame. So if you see something like that, then know that this demand area is about to hold the prices and for the bullish rally. But if it doesn't happen and this momentum that is still carrying decides to break this demand, the rest believe it's coming to the second demand for the buy entry. So just about that, let's see what the market is telling us for the week. So for this week, it's already Friday, although we'll be getting another data on day. But as we speak, you can see here on macroeconomy that GDP growth rate for USD is 3.2, unemployment rate is 3.7, inflation 0.4, interest rate 5.5, commitment of traders and net long, seasonality bearish yield. JPY comparing with JPY minus 0.7, 2.4 for unemployment rates, inflation 2.6, interest rate minus 0.1, commitment of traders net long, seasonality bullish. So overall, USD JPY is in a long-term buy outlook. All right. So aligning our technicals, you can see our technical. Who is that now? Mute your mic. Jima, mute your mic.
Taking money while you're buying and selling.
Sorry for that. So overall, USD is in a long-term buy. So aligning our technicals with what is happening in the fundamental, you can see that everything is in the anticipated direction. So that's it for USD. Heading who is this now? Mute your mic.
I have a question.
Who is that? Please.
Sis, I have a question.
Please just hold on. When it's time for question, I'll entertain your question. Okay. All right.
Yes.
So let's look into the next assets. Prices of what should we check? Let's check oil. Oil prices in the bullish rally. Nothing is telling. Nothing to analyze. Oil is going up. Bullish on oil prices. This is one of the most clearest setup. Jesus Christ. Who is this Musa now? Musa of a person. Oga Musa, delete this thing down. Forex traders. This is not your chance that you'll be coming to bench. Delete this thing, Oga Musa. Okay, so very much easy on oil prices. Oil prices has been, in a bullish rally right from when I can even remember. Remember, I called this collapse from $102 per barrel to $84 per barrel. It's still in my portfolio, all of this. But as we can see, oil has now collapsed into a major demand area. After that, there was a break of structure, pulled back into the demand area, closed as a bullish engulfing, going to the weekly time frame. We could see that there was a very clear break of structure. The break of structure was very clear. Let me delete this sheet. So there was a clear break of structure on the weekly time frame somewhere around here. So it's very clear that oil prices is in a bullish rally. That's it for going to the daily time frame, although it is consolidating as we speak, but it doesn't stop the fact that oil prices is going up. So there was a pullback where we got our first entry here. I remember buying oil somewhere around there. I bought oil. I've been buying oil right January, 3rd January. I've been buying oil. I had my first entry point here, second year, third year, until this pullback, massive pullback to an area of discount where this buy position was added. So as we speak, oil price is still consolidating, but this is a live call that oil prices, I am expecting the prices of oil to rise from where it is to first level target $83 per barrel, second level target $98 per barrel, and my overall target at $120 per barrel. I call this life. All right. Prices of oil is rallying from where it is to first level target is $3 per barrel. Second level target is $98 per barrel. Overall target $120 per barrel. So that's my outlook. That's my trade call on prices of oil. And I think at this point, I should be ending this section. I think I shouldn't be analyzing any other assets. With what I've told you now, what you have to do with the assets, if you trade like me, you would only avoid Musa, 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 Musa. This is my fourth time of calling you out in the live call. You are drawing something on a whiteboard that and a structure is working on. You're
Sorry,
finding
that's
it
it.
you're
I'm
finding
trying
it difficult to kindly just listen and just stop doing things carelessly. Look at what you've done. You've messed up the whole thing. Please don't do this now. Delete it out, please, sir. So what was I even saying? Also, I've maybe forgot what I was saying. What was I saying, guys? Okay. So what's that? So what I was saying is, if you trade like me, you want to avoid the assets that are not giving the direction of what the market is doing at the time, and only focus on the assets that are only giving trading opportunities and opportunities for high probability trade setups. And also, let me use this opportunity to add that irrespective of your different technical trading strategies, or irrespective of your strategies, all right, what you would want to do is to try as much as possible to make your technical analysis align with macroeconomics, or what you call fundamental analysis, at all time. At all times, try as much as possible to always make your technical analysis irrespective of your trading strategy. You don't have to be a swing trader like me. You don't have to be a position trader like me. You can still be a day trader. But all I am saying is that you just have to make your technical setups align with fundamental or with macroeconomics. All right. So you don't have to trade like me. You don't necessarily have to trade like me. You can use a different trading strategy, but just try as much as possible to make that your technical analysis, that your setups align with what macroeconomics is saying. If you're having issues with macroeconomics, not to worry about. We send out these things to all our subscribed members. It just costs $49 per month. All right. So with $49 per month, you get this, and you get all these data. You can see them. The weekend view is sent to you privately, and there's a call held by a research analyst with all the subscribers of the global macro reports every Monday morning before the week, the market opens. Normally, I think on Sunday, it was Monday before, but now we've now brought it back to Sunday, so that Sunday we analyze the global macro outlook with you guys, and you now with this outlook go into your trading week prepared. So you don't have to start learning macroeconomics from scratch, trying to learn GDP, unemployment, inflation, and all of those things. We can do that for you and give you a compiled data like this every week. Just a subscription fee of $49. All right. So I'm not bashing anybody's strategy. I'm not bashing anybody's analysis and all of that stuff. All I'm just trying to say is that make sure that at all times, use your technical strategies. All right, this is your analysis aligns with fundamental and with my or macroeconomics. You will have high probability trade setups if you can do this. All right. So is there any question? The floor is open for question. If you have any question, just unmute your mic, ask your question so we can answer the question and we'll move forward. Any question? Or just stop sharing the screen now. Any question, guys?
Question.
All right, sir, shoot.
So I want to ask, as a newbie now, so which platform will you recommend for beginner that is also suitable for swing trading actually?
For what?
For swing trading, like holding trade for weeks, months, and something like that.
Okay. I've been a swing trader for some time now, and this the prop firm that has been working. I don't want to give credit to any prop firm in an open space, right? But now this is just based on my personal experiences with prop firms. I have used funded next, right? Funded next has been working perfectly for me and for my swing trading strategies. The next prop firm too that's been working perfectly for me is 10 Trade for my swing trading strategies. I've not tried any other prop firm, although that in this area there are a lot of prop firms coming out with rules, coming trying to have superior rules and all of that stuff. But I haven't tried so many of them out there. I'm telling you from my personal experience, and this is not like a sponsored post or a sponsored video where I'm going to be talking about a particular prop firm. No, this is based on the experience and of all what all the prop firm I have used personally. 10 Trade and Funnel Next has worked perfectly for my swing trading strategies. Okay. The person who asked the question about profit, have I been able to clarify that?
Yes, sir. Yes, sir.
All right. So if you have any question or further inquiries about profit, what you just have to do is reach me on WhatsApp. Do you have my WhatsApp number?
Yeah, I think I have it.
I don't mean the company's number. I mean my personal. Do you have my WhatsApp number?
No, I have one I saw on YouTube actually.
Okay, 09032364027. That's the WhatsApp number. All
Sorry,
right.
can you come in?
09032364027.
0903236.
For foreigners, you had the country code which is +234.
Yeah, 09032364027.
64027.
Okay, sir.
All right. Any other question, please?
Hello, sir.
Yes, I can hear you. Go ahead.
Yeah, please, I want to ask that how many pairs do you trade as a swing trader? How many pairs? It is one of the things that is affecting me now. I'm able to focus on just one pair or two.
Okay.
Thank you.
Okay, just to answer that question, right? One of the very first, the basic principles of diversifying portfolio is actually spreading your risks across multiple assets, right? So what I do advise traders is if you want to diversify your portfolio, you pick a pair in a form of in a family. Now let me clarify what I mean by that. Now for dollar quoted pairs, all right. So under Euro USD, GBP USD, AUD USD, NZD USD, out of all those dollar paired pairs, you choose one asset there and backtest on. Okay, you have to backtest on all of them to find the one that usually would work for you. All right. So once you do that, you pick one from there. So let's assume after you backtested or you decide to pick GBP USD. That means you picked one asset from dollar quoted price. You now go into the Japanese yen. All right. You backtest all pairs that is being quoted to JPY, which you can backtest GBP JPY, US JPY, CAD JPY, NZD JPY. You understand what I'm trying to say? Once you backtest that, pick one from there, from that family, or from that asset class. Once you pick one from there, you now pick one commodity. So you could decide to pick crude oil, you could decide to pick gold. Gold is a commodity, all right, although it's under metals. Crude oil is a commodity under energies. So you pick one commodity, you're good. All right. So one way you want to you now notice that you can effectively diversify your portfolio while still keeping your watch list small. Because when you have a lot of pairs on your watch list, it causes a lot of there's no focus. All right, there's no focus because when you get stopped out on this particular asset, you run to this one, you get stopped out, you run to this one, you keep running like that, and before you know, you getting stopped out and could end up losing up to 5, 6, 7% of your accounts. So once you pick like this from asset classes, you know how to spread your risks across them. So this one you can put 0.5, you can risk 0.5 in this trade, risk 0.5 in this one, risk 0.5 in this one. If one should fail, you know that one would likely cover up for that one, hence the name diversification. Hence why diversification is a risk management strategy. All right. So pick
Yes.
from different asset classes, but you have to backtest all of them to know the one that works well with for you, or the one that matches your personality as a trader, because this is a personal stuff. So what works well for you might not work well for another person. Just pick, analyze, track, backtest, forward test, and do all of that stuff. All right, that's the concept of diversifying portfolio in forex markets. Have I been able to answer that question?
Yes, sir. Thank you very much. Thank you, sir.
Any other question?
Hello, good afternoon, sir.
Good afternoon, boss.
Thank you. Please, I have a little question I would like to ask, right?
Shoot your question.
All right. Regarding forex market, what actually moves the market? I've read about the market makers, the banks, the New York big boys, all these things. But at some point, I do get like, when you are trading, you feel like you are doing the right thing sometimes, but your trade goes against when you check it, you feel like you're doing the right thing.
There's one person should speak at the same at the time. Who is another person? Please, if you're not speaking, if you're not asking a question, mute your mic. Who is speaking? What's your name? The person who is asking this question.
So the question I want to ask is forex gambling? Are we trying our best, or is still the economic of the world? This is the question I want to ask actually.
Okay, can you reiterate that your question? Let me guess. Can you re-ask that question again?
Okay, the question is forex actually being moved by the economy of the world, or is it gambling? Are we trying to like go the ways of the market,
Okay.
or are there people just predicting the market or moving it however they want behind the doors?
Okay. All right. So just to answer your question, it's very much simple, right? Forex is a decentralized financial market, right? With huge volumes traded on a daily basis. There are several participants in the forex markets. There are institutions, and under this institution, there are banks, investment banks, liquidity providers, and there are also retail traders, which is you and I. There are hedge funds. There are big, big guys. There are several participants in the market. However, the people that have the potency to move the market are the big banks. The volumes that is traded cumulatively by retail traders does not have the potency and the power to move the market. So as retail traders, we are just speculating on the underlying assets, but we don't have that real, money, because it takes money to move the market. It takes liquidity. What is liquidity? Liquidity is money. It takes liquidity to move the market. So as retail traders, we don't have enough liquidity to move the market. Hence why big banks, institutions, they just have that power to move the market. Because now let's assume this is, an institutional trading floor. Customer might call, says, I need so amount, or I need so million volumes of this asset. Can you buy at this price? They would likely give you the pricing. Buy this asset for me at so price. 20 million watts, that's for example, 20 million watts, 20 million, they give volume. So these volumes that they are using to either buy or to either sell a particular asset has the power, the potency to move the market. But as retail traders that you are using 0.01, that's your 0.01, 1.0, 2.0, 100.0 lot size. That volume is not strong enough, it's not powerful enough to move the market. Of course, there are several manipulations and all of that stuff. And we all know the fact that as retail traders, most times retail traders are the liquidity to the big banks. Hence why the concept of ICT, smart money trading, and all of those things came to fruition. That there's a particular pattern, there's a particular way that institutional traders, trade and all of those things. And hence why people are trying to emulate how institutional traders are trading. So what I'm going to tell you is that there is the forex market is not gambling. All right, it's not, you're not gambling. But now, what makes it not, well, it's very close to gambling, but what makes it not gambling is because you have an edge. So that your edge is what gives you that protection. What gives you that an edge? You know what an edge is? Simple terms. It's what
Yeah.
gives you that I'm still searching for the right word to use.
Advantage or something.
Yeah, that edge
Opportunity.
is what,
Entry
yeah,
position.
what?
Entry position.
Not
Entry
entry
position.
position. Not entry position. Your edge, yeah, your edge could be your entry patterns, all of those things, the way you analyze the market, your understanding about the market, your understanding about psychology, risk management, very important, equity management, all of those things are what gives you the edge over the market. So I understand that this question came from the place of frustration, right, Prince Will? Because probably
Yes.
you've done a lot of stuff, the market seems not to be cooperating and all of those things. It's as if things are lacking and all of those things. So what I would likely advise you is just to spend time to refine your trading strategy. All right.
Yeah.
Someone asked a question, and here's what I'll come back to that. So refine your trading strategy, work on your psychology, very important. Your psychology is your greed. That greed you have in the market, that's fear, fear of missing out, all of those things. So if you can work on those things, it goes a long way to give you an edge in the market. All right. So, but have it at the back of your mind that the people that move the market are the big banks, the institutions, and that as a retail trader, you don't have the power to move the market like the big banks because you don't have money. Have I been able to verify that?
Yeah, thank you very much.
Any other question? Any other question?
Yeah, I have a question.
All right, Shima, let's hear you. Let's hear you, sir. Who is asking a question? Please ask. I'm listening. Shima, let's talk now. I'm listening to you.
Okay, I didn't join the call earlier, so I missed the beginning part. So I just wanted to ask, did you do a rundown on gold?
Do I do what?
Did you do a rundown on gold?
Yes.
Like the direction of gold markets?
Yes, I did that.
I don't know if you can just briefly explain it for me.
No. Why? The reason why I'm not going to do that is that I don't want this section to be too long. We've already spent 1 hour. So what I would advise you is that there's a recording of this section. It will be posted on YouTube within the weekend. All right. So go to the recording that will be posted on YouTube, on my YouTube channel. All right. You will be able to watch the breakdown and the analysis of it. All right, sir.
All right, thank you.
All right. So any other question? Is there any other question?
Yeah, well, sir.
Yeah.
Another question I would like to ask is this: is it really compulsory to use Fibonacci while analyzing the market? Because analyze using the using support and resistance, especially if I see something like double bottom, right? That's like the W form.
Yeah.
So I always have the market going to the sometimes almost to the point from which it left. That's the last higher high,
Okay.
right? And this is always my take profit when I'm buying. So, but sometimes market will get to the middle and turn back, and I will be waiting. Maybe the market would continue going up, but at some point it will be going down, break my support and keep going down. So I'll be like, after being in profit for some time, how come this market just all of a sudden decide to go down and take me out? I have people who use Fibonacci, I've seen them a lot. I don't know if it's because I've not been using Fibonacci, or does Fibonacci play such rules in forex trading? Thank you.
All right. The quick answer to your question is that Fibonacci is actually a mathematical would I call it mathematical tools that was put together by a particular mathematician and was employed into the forex space and all of that. So it gives you critical areas where there will likely be something that may happen on those areas. All right. Different people have their different how all people apply their Fibonacci differently. Okay, but in your situation, it's not actually a Fibonacci issue. What you're having issue with money management or with equity management. As you know, as a normal, or let's say as a basic principles, you are not supposed to hold your trade entirely throughout the projected move. You're not supposed to hold your trade throughout the projected direction. That's why at some point you take some parts of your position of the market, some profit off, while still holding onto the overall target is hit. Now, on the analysis I've done earlier, I'm not going to hold on to all the profit target is hit. There are certain areas I'm going to take partial profit like 20%, 10%, 5%. And once I take partial profit, I will now break even. I'll offset risks on that position by moving my stop loss above the entry points. So if I do that, and for some reasons later in the future the market decides to stop halfway and pull back into my entry points, I'm not going to lose any money because I was able to offset risks, and two, I was able to take some partial profit of the market before the reversal happened. So I'm not losing any money entirely. So what you have to do now is after now, right? You should have a principles, or you should be able to have particular areas where you begin to take some partial profit of the market while still holding for your overall profit target to be hit. All right.
Okay. Thank you so much.
You're welcome. Any question? Someone saying under the open now. Is he here? Who is not here?
Yeah, I'm here.
Is asking the copy trading, can you slash the price? You know the situation of the country now. Some people are interested in the copy trading, what kind of, but would you can slash or more? The prices, that price is not under my, this, we are not a prop firm. Okay, open now. We are not a prop firm, we are just a trading firm. So what we do is we bring our trading expertise into the forex market. So we only partner with the prop firm, which is TenTrade. Okay, so TenTrade is a company providing the fundings to you, the individual investor. Let me use the word investor in this conversation. All right. Now, what we now do is we charge you $99. What comes to us at Record Finance is $99 you're paying. The $300 is going to TenTrade, it's not coming to us. So there's no way I can slash the price. Or there's no way we can slash the price. Do you understand me?
Oh, okay.
So the entire $400 is not coming to us. It's coming to two companies. It's going to two companies. In fact, the $300 are not going to even send it to us. You are going to be using it yourself to purchase your probe account. What you're sending to us, what you are paying to Rainbow Finance is the $99, which serves as a management fee. All right. So there's no opportunity to either slash prices and all of that.
Okay, I get it now. Thank you.
All right. Any other question? Any question? I don't think that we have any other questions. So we'll be ending this section right now. Is there any question? I'm going to ask them. Give me us 10 seconds. 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. All right, so thank you once again, guys. We're going to have another section like this probably next month, where we can now see what has unfolded during this period by next month. So thank you very much for showing up. Thank you for being part of the section. I hope you got value. If you got value, give me the fire emoji in the comment section. Give me the fire emoji in the comment section. All right. If you got value today, just give me the fire emoji in the comment section. Give me fire emoji in the comment section. I'm still waiting. Fire emoji in the comment section. Give me fire, 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 fire. All right. So see you guys later. See you guys next time. Trade responsibly, and I wish you good luck and good trading.